Everyone's focused on the $100 billion headline. That's the distraction. When people see a number that big, they assume one thing: stability. But stability is exactly what this quarter destroyed. Because what just happened wasn't growth, it was a mutation, and almost no one noticed. Google is changing shape, and the worst part is most investors are still buying it for what it used to be. They're running yesterday's playbook, thinking it still applies to a business that's quietly reorganizing itself from the inside out. And if you think that doesn't affect you, it does. Because the gap between what Google is and what people think it is, that gap is exactly where people get wrecked. You want to know where the risk is? It's in assuming Google is still Google. Most people celebrate big numbers. Smart people ask where they came from. Google just posted its first ever $100 billion quarter. Total revenue came in at $102.3 billion, up 16% year over year. And here's the part that matters. That growth didn't come from a single segment. It came from everywhere, 21%. Even net income grew 35%, hitting $35 billion. And if you back out the $3.5 billion EC fine, operating margins actually expanded. More scale, more spend, more profitability. That's not normal. They didn't do it by cutting costs. They spent more, they hired, they scaled AI infrastructure, and the numbers still moved up. That's not just a strong quarter, that's a signal. The business isn't just working, it's compounding. Google's AI is printing real cash. Everyone talks about AI like it's some sort of magic button. They miss what actually matters. Google isn't using AI to make flashy demos. It's using it to make money. Every minute, at global scale, and the best proof of that is sitting in your pocket right now. YouTube. Most people think YouTube is just videos. It's not. It's an engine. The second you tap on a thumbnail, the machine starts working. AI predicts what you'll watch next. You stay longer, the model gets better. That feedback improves your recommendations, which makes you stay even longer. That's the front end, but the real power is behind the scenes. While you're watching, Google's AI is figuring out which ad to show, how much to charge, and what sequence performs the best. The system updates in real time. It adjusts bids, it learns what makes you click, and it feeds all of that back into the next cycle. What you're looking at isn't just personalization, it's a closed loop. AI feeds the viewer feeds the data feeds the advertiser feeds the budget, and the budget feeds Google's profit. And all of it depends on one thing: Google getting in front of you. That's why Google pays $18 to $20 billion a year to Apple just to be the default search engine in Safari. Not for clicks, not for conversions, just to be there when you open your phone. Because they know the second they're in front of you, the loop starts. And once the loop starts, the machine does the rest. That's why YouTube ad revenue grew 15% year over year without having to grow total users. They just monetize better because the machine got smarter. And here's the punchline. This exact loop is being rolled out across search, shopping, Gmail, Maps, Android, and cloud. Same model, same AI, same outcome. So when people ask, what's Google's moat? This is the answer. It's not code, it's not compute, it's the loop. You can't outspend that. You can't out-hire that. You'd have to rebuild the entire feedback engine from zero without access to billions of users, trillions of data points, or decades of behavioral signals. That's why this isn't just AI. It's domination, and it's already printing. For years, Google Cloud was the joke of the big three. Too expensive, not sticky, late to the party. That narrative just died. In quarter three, Google Cloud did $15.2 billion in revenue, up 22% year over year. That's not the story. The story is margin. Operating margin hit 23.7%, up from 17.1% just last quarter. Let me repeat that. Not year over year, quarter over quarter. That is an offensive play. Because here's what most people don't realize. Cloud is where Google's AI business lives. Gemini runs there. Training happens there. Enterprise integration starts there. Every AI contract, every model deployment, every enterprise demo, it all flows through the cloud. And the pipeline is getting stupid big. Google's backlog just passed $155 billion, up 80% year over year. That is locked in forward revenue. It's not speculative, it's already booked. Cloud isn't just catching up to AWS or Azure. It's building something they don't have, a vertically integrated AI stack. Compute, model, tools, and service, all in one place. That's rare air. This is no longer an R&D line, it's a cash engine, and it just shifted from defense to attack. And here's how they did it. Google's been spending like a lunatic on infrastructure, and now we're seeing why. Capital expenditures came in $11 billion this quarter, up 45% year over year. Most companies would choke on that kind of spend. Google turned it into margin, because here's the game right now. Whoever builds the best AI infrastructure wins the next decade. Everyone's in. Meta, Microsoft, Amazon, and they're all throwing billions around like poker chips. It's the cost of staying a big dog, but there's a catch. Capital expenditures is a double-edged sword. Spend wrong and you get bloated. Spend right and you lock in dominance. Google got it right. They built scale before demand showed up. Now that demand is here and they're printing. This is what smart aggression looks like. They didn't wait for perfect. They built first. Now they get to sell compute, models, and capacity while everyone else is still laying concrete. Most people think the AI race is about who has the best model. It's not. It's about who owns the stack, top to bottom, and right now, Google is quietly locking up every level. Start with the hardware. Google's not renting from NVIDIA like everyone else. It's built its own silicon, TPUs tuned specifically for training and inference. That means they control the performance curve, the cost structure, and the deployment timeline. Yes, they still work with NVIDIA, but they're not dependent on them. That's the difference. Gemini runs on TPUs. It scales across Google Cloud. It's being integrated into Workspace, Search, Ads, YouTube, Android, and more. This isn't a product, it's a platform, and every user interaction feeds the feedback loop. Then comes distribution. Billions of users across Gmail, Chrome, Maps, YouTube, Android, Search. That's not market share, that's an input advantage. It's how you train better models faster and cheaper than anyone else. Now add in data. No one has more behavioral, contextual, and real-time user data than Google. That's not just a head start, that's a runway most companies will never catch up to. And here's the final piece, the integration. While others bolt together vendors, APIs, and duct-taped infrastructure, Google builds in-house. Custom silicon, native models, owned compute, distribution through first-party apps, monetization via ads and cloud, all under one roof. That's not efficiency, that's control. The more they build, the tighter the loop gets. The tighter the loop, the harder it is to break in. That's what a real moat looks like. Not patents, not partnerships, control at every level. And it's not static. Every quarter, this machine gets harder to compete with. And now the hidden risk no one talks about. Everyone's so obsessed with the AI race, they forget the most obvious truth. Moats only matter if you use them right. Google's got the stack, but the question no one's asking is, can they actually execute? Let's make one thing clear. NVIDIA owns the picks and shovels, the hardware, the software layer, the developer ecosystem. They sell to everyone, including Google. They don't care who wins the AI war because they sell to all sides. That's leverage. Google stack is different. It's a closed system. They own the model, they own the infrastructure, they own the platform. But here's the catch. That control comes with complexity. Every layer they control becomes another place they can fail. Integration is hard. Execution is harder. And the risk isn't competition, it's internal cannibalization. You see, Google makes over $48 billion a quarter from ads, most of it from search. AI threatens that, not from the outside, from the inside. If Gemini gets too good, it starts replacing search queries. If it gets too commercial, it stops being useful. Either way, Google has to walk the line between innovation and self-destruction. That's the tightrope. This isn't a question of tech, it's a question of courage. Can they kill their golden goose before someone else does? Because here's the real risk. They built the infrastructure, they have the AI, they own the distribution. But if they flinch, even once, and slow roll the rollout to protect short-term ad revenue, it's over. Someone else will move faster. Somebody else will train on cleaner feedback, and the moat they spent years building becomes a cage. So is Google a good long-term investment? Let's stop pretending the numbers speak for themselves. They don't. You do. You decide if they're worth betting on. So here's the bull case. Google is one of the most profitable companies on earth. Net margin, 32.2%. Operating cash flow, up 38% year over year. They're throwing off billions while still scaling. They control the full AI stack, silicon, model, compute, deployment, and monetization. They have $110 billion in cash, almost no debt, and are buying back stock. The Gemini AI loop is already showing up in YouTube, ads, cloud, and workspace, and they're just getting started. Add to that a $155 billion cloud backlog, add dominance across every channel, and global distribution baked into Android, Chrome, Gmail, and Maps. That's not just scale, that's embedded advantage. Execution is improving, margins are expanding, and AI is turning from hype into revenue. But here's the bear case. Google is still addicted to search. It prints money, but it traps them. If they push Gemini too fast, they cannibalize the golden goose. If they go too slow, someone else eats their lunch. Their AI products are still confusing, inconsistent, and fragmented. Internal silos slow down innovation, and while cloud is growing, it's still behind AWS and Azure. There's also the culture risk. Big company, slow decisions. Politics over product. In AI, speed is everything, and Google doesn't get unlimited chances. So what's the truth? The truth is simple. Google has the tools, the talent, the treasure chest. If they execute, they will be one of the most important AI companies in the world. But it won't happen by accident. The moat is real, the risk is execution. My thesis? I'm still bullish. Alphabet is one of the most compelling AI infrastructure plays on the planet, and the one with the most levers to pull. If Gemini scales across search without breaking the model, this stock could be severely undervalued. But if they fumble, the whole stack stalls. The bottom line, this is a high conviction long-term buy for me, but you do you, boo. The numbers are moving up. Not in a hype scale, not in narrative, in real contracts, real margins, and real cash. And here's the question I always come back to. Is this business getting stronger every quarter? Yes. Are the numbers trending up across customers, revenue, and cash flow? Again, yes. Is the product becoming harder to compete with? Absolutely. This is what you bet on. Not emotion, not optimism, just operational proof. So here's what I'm doing. I'm watching Google for entries, and I've been selling cash secured puts until I get the price I want. I want to own this business, but I'm not chasing the chart. If we get weakness, I'll be adding. But let's be real, this isn't risk-free. Google isn't a rocket ship, and it won't print returns just for being in the right space. If they miss on AI, if margin trends reverse, or if Gemini stalls out, this could underperform for years. That's the risk, and it's real. That's why this isn't a max size position for me. Not yet. I want to see consistent delivery, more Gemini wins, more cloud margin expansion, more search integration without cannibalization. But make no mistake, this isn't a company I want to bet against. Alphabet has the cash, the compute, the contracts, and the control. Now they just need to keep executing. If they do, this could be one of the best AI infrastructure bets of the decade. That's why my thesis on Google remains firmly bullish. And that's why I'll be building my position patiently and with conviction. Let me ask you something. Who else is breaking down Google's margin trajectory, infrastructure moat, and the real AI threat to search while actually showing you how to position around it in real time? Who else gives you both the bull and the bear case with a strategy that makes you smarter every single investment? Nobody. That's why my accounts are up to $6.38 million this year with an 82.83% year-to-date return. And it's not just me. Jungle just posted a $49,994 gain in 1 month. Ardenton is up 138.39% year-to-date and said could not have done it without Jerry. And To the Moon made $86,820 last month and said it best. Grateful every single day I don't have to set foot in an office. This isn't hype, this is execution. And inside my Patreon you get real-time trade alerts with full breakdowns, entries, exits, and the why behind every move, daily market analysis, no fluff, just what actually moves the needle, and the exact momentum strategy I use to scale multi-million-dollar positions with discipline. Plus, access to the most execution-focused community of investors I've ever seen. It's only $30 a month, and that's nothing when you see what it's doing for others. So instead of blowing $30 on bullshit, put $30 into something that could actually make you better. And if you don't 3x your investment in yourself, cancel it anytime. Are you ready to stop watching other people win and finally become one of the stories people talk about? Then I'd love to feature you next. You can scroll or you can scale.